and welcome. You're watching Markets at Money Control. It's a Wednesday morning and we'll be discussing the overnight developments and the key trends to watch out for today. I'm Rakshita Madan. I'll look at the headlines first. GST revenue collections slow down for the month of August. ICICI Lombard to list today on bourses. The final issue price has been set at 661 rupees per share. And US Fed Chair Janet Yellen says gradual rate hikes should continue. Dollar gains on that. Now time for the market chat. Joining me is Santosh Nair, editor Money Control. Good morning, Santosh.
Good morning, Rakshita.
So yesterday we were seeing a down day, and towards the late trade we saw recovery of all the losses. Nifty managed to hold on to the 9850 mark. Can that be seen as some kind of positive here?
Well, looks very doubtful. The bulls certainly don't seem to be convinced. There's just too much of bad news at the moment for investors to go long on the market. As you mentioned already, tax collections in August were slow. You're seeing GDP forecast cuts. Crude, but that's the biggest spoiler for the Indian market. Now it's climbed to a highest level since July 2015, and that has direct implications on inflation. Now already retail and consumer inflation have been steadily inching up over the last couple of months, and add to that you don't have any pickup in corporate earnings growth, so it's a bleak picture. Of course, the only saving grace is that liquidity still has been fairly strong. You've seen mutual funds pump almost more than 1,000 crore rupees every day, but whether liquidity alone can help hold up the market, that remains to be seen.
Right, and the rhetoric between US and Korea continues. US has now said that they are prepared for devastating military action. That is clearly keeping global markets on its feet.
Well, the sentiment in global markets is a bit edgy, but if you look at the movement over the last few days, it also appears to be that the market has discounted it to some extent. Right now, Asian markets are trading mixed. You had US equities closing slightly higher yesterday. Investors are watching the developments nervously, but for the time being, it looks very unlikely that you could see any major upsides. The markets are likely to stay range bound for some time. That's the view that's coming in from market experts around the globe. So technically speaking, is it time to make fresh shorts? Technical analysts say that the index has formed a dragonfly doji pattern on the charts. 9820 is the support level that is being talked about. On the higher side, you have 9960 acting as a stiff resistance. Now, the big worry so far has been that foreign funds have been consistently selling, further selling yesterday, and now between August and September, they have sold close to about 25,000 crore worth of shares. The only saving grace once again is that buying support from mutual funds, but technical analysts say that probably the market could be in for a phase of consolidation before it makes a decisive move either ways.
Right, and before we go look at the stocks that investors should watch out for today?
Clearly all attention will be on the listing of ICICI Lombard shares. That could also give some indication as to where the market could be headed in the short term. The issue price was 661 rupees. Now, most IPOs, barring a few, had done very well on listing day. Now, it remains to be seen if ICICI Lombard can repeat that trend. Among other stocks to watch out for, HCL Tech has been consistently seeing high delivery volumes over the last couple of trading sessions. Yesterday, you also had a fair bit of delivery activity in stocks like Ramco Cements and also Grasim Industries. There's long build-up being seen in futures of DHFL, Oil India, IFCI and HDIL. Some bit of short build-up being seen in stocks of Shriram Transport and Chola Finance. Also, the Economic Times lead story today is that under pressure from investors, IDFC and Shriram Transport might rework their merger formula.
Okay, thanks for that insight, Santosh. With that, it's a wrap on this edition of Markets at Money Control. For more news, views and updates, stay logged on to moneycontrol.com.